Now there are procedures we need to follow when we want to reconcile the bank statement with the cash book. Step 1 is to check if the cash book balance is different from the last balance in the bank statement. Let's go ahead and do that. We can see the balance of our bank statement is $24,018, while the balance of our cash book is $26,300. So in this case, it's not the same. So then we move on to step 2. At step 2, it reads, if different, compare the debit side of the cash book with the credit side of the bank statement. So the balances are different, so we need to compare the debit side of the cash book with the credit side of the bank statement. So now we look for what are the transactions that are on the bank statement and on the cash book. And we can find a $4,800 for rent income on the cash book, and it's also reflecting on the credit side of the bank statement. So we can scratch that one out. Now let's move on to step 3. Then compare the credit side of the cash book with the debit side of the bank statement. So on the credit side, we see if we can't find any of the entries that are the same on the debit side of the bank statement. There we can find drawings $2,300 in the cash book and also cash withdrawal on the bank statement for the same amount, so we can scratch those out. And then also the $1,200 for salaries, it also reflects on the debit side of the bank statement, so we can also scratch those out. Then we move on to step 4. Items that are not in the cash book must be used to update the bank account of the cash book. Now what are the items that are not on the cash book? It's all the items that are not scratched off on our bank statement. We can go ahead and encircle all of those. So all of the items on the credit side we will post to the debit side of the cash book, and all of the items on the debit side of the bank statement we will post to the credit side of the cash book. So now let's go ahead and do that. There we go. And then when we are done, we can calculate our totals and then our balance carried down. And this balance carried down we will use when completing our bank reconciliation statement. And then finally, we have a balance brought down on 1 June 2018. Let's move on to step 5. The items in the bank statement must be used to prepare a bank reconciliation statement. Now these are all the items that are on the cash book but not on the bank statement. We can also go ahead and encircle those items. It's the 7,000 capital on the debit side and then Jai Traders on the credit side. Please note that we do not circle the opening balances. So the items on the credit side of the cash book are EFTs, which is not reflected, and they will be posted to the debit side of the bank reconciliation statement. And then the items on the debit side of the cash book, they are outstanding deposits, and they will be posted to the credit side of the bank reconciliation statement. Now let's go ahead and complete our bank reconciliation statement. Now our bank reconciliation statement for Flint Stores for the month ended 31 May looks as follows, and this is format 1. We will start by our balance according to the bank statement. Now if we had an overdrawn balance, then we would have entered this amount on the debit side, but we do not have an overdrawn balance, so we can leave this amount on the credit side. Then we enter our outstanding deposits on the credit side. Then we can total our credit column, and then on the debit side will come our EFT and debit card payments not reflected, and then finally our balance according to the cash book. And this is the balance that we calculated at step 4. If our cash book balance had a credit balance, then we would have entered this amount on the credit side. And if we total up our debit column, we will come to the same amount, and our debit and credit side will balance on $31,018. Let's move on to our second format. Our second format looks a little different. Here we will start with the balance according to the cash book, and then we will add our EFT and debit card payments which have not reflected. Then we will get a total of $31,018, and then we will subtract our outstanding deposits of $7,000, and then when we do this amount should equal the balance according to the bank statement, and this amount is $24,018, which is our balance according to the bank statement. Now, in cases where the balances are not given in tabular fashion, then you can use the following guideline. The balance brought down is, if it's on the debit side, it means that the bank balance has a favorable balance. If it's on the credit side, it means that the bank has an unfavorable balance, or it's overdrawn. Interest on the current account is when interest gets added to the favorable bank balance. Interest on overdraft means when interest is added to the unfavorable balance. And then the account or debtor's name, this is for our credit transfer or our direct deposit. Our bank charges is for our service fee, our card fee, or our monthly fee. We enter the name of the expense, and this is usually a debit order, a standing order, or a direct debit. For our errors and omissions, they can either be entered on the debit side or on the credit side, depending on the transaction.